The discipline of day trading. This is the part that a lot of people don't even want to discuss. This is the part where we actually lose most students, because most day traders, beginners day traders, they just don't want to admit there's risk to day trading. And if you tell them there's risk, boom, they fly away. Most likely, this is where I lose most of you guys. So, to be a day trader, consistently profitable day trader, you have to be disciplined, just like a soldier. What does a discipline mean? Cut your losses. You heard that many times, which means that if the stock market, if you say I'm not going to lose more than 25 cents per share, and the stock drops to that 25 cents per share, let it go. You should have a hard stop, which means it's already been programmed. And when it goes down, let it go. You can always buy it later at a cheaper price if it goes downtrend. You save that downtrend to yourself and you buy it at a better price later. So sell it at that and buy it later if you want. Control your emotions. Just like I said, it's emotional trading is we all been guilty, including myself. You don't want to miss out. You know, you don't want to be wrong. You don't want to lose money. You don't want to. There's so many fears. Mark Douglas, actually, if you haven't heard him, Mark Douglas is a trading coach that was focused solely on psychology. You should go to our YouTube channel and watch some of his videos. He lists 4 different fears that everyday trader goes through. I highly recommend that you go to watch his videos. You need to find your strategy. Are you a trending market? Are you a trending market trader? Are you like support and resistance trader? Are you like the spread trader, which means you're trying to buy and sell in between the spread? Are you an options trader? Are you what kind of trader are you? You have to try every single one of them at least once and see, are you comfortable with this? Does this make sense to you? Does it make sense to you? But you have to find what it is and zoom down, like I would say, focus on only three, if not one. A lot of people make living on one strategy. I would say in the beginning, just focus on 3. This way you're not sitting there doing what we call it boredom trading. Do not, involve yourself in boredom trading because your trading strategy is not there and you're just trying to force it. Practice paper trading. Just what I said, there are simulators now where it gives you access just like if you were actually trading the real platform with real money, and it routes your orders in a very similar way to the real money or real or live account. Try that, see if it works or not. You'll save yourself a lot of money, a lot of aggravation. But at a certain point, once you start becoming profitable on the simulator, I highly recommend that you start doing your live trading with smaller account. That's because simulator does not have that fear. You're not really losing money when you lose, and you're not making money when you're making money. So it does not give you that the psychological complication that comes with trading live account. So once you feel your strategy is working, start applying that on a live account, smaller size, so you see if it actually works or not. You see yourself, you will understand yourself a lot better. I can tell you this one thing. Day trading will teach you about yourself more than any other profession on this planet, because your failures is facing you straight in the face, is looking at you straight in the face. Your winners are telling you exactly what you have done right, even though we learn from losses a lot more than we learn from winning. You need to set your risk reward. Like I said, if you risk $1, say I'm willing to make $3. I'm willing to lose $1 for the potential to make $3 or $4. You need to understand where is your exit is. Doesn't matter if it's a losing trade or a winning trade. Where is your exit before you even get in? If you leave it up to the stock, if you leave it up to the market, if you leave it up to the news, if you leave it up to Elon Musk, you're going to lose. Yes, you're going to be making huge wins, but you're going to be consistently losing. Don't go all in. That's why we started. You saw this guy. He started with 100 shares, then he built up his position to another 100 shares when he realized that the market confirms to his strategy. So you need to scale in, scale out. That's exactly what we saw. He scaled in and he scaled out. Avoid FOMO, fear of missing out. We spoke about this. You see something's all hyped up in the news, see everybody's tweeting about it, see your friends talking about it. Boom, you get in way too late, and boom, it tanks, and boom, you lose all your money. Don't follow others. Most traders nowadays they take their trading advice from memes, from social media, from the guy, the loud guy with the million followers saying, I made $1 million from whatever today. And they just want to do the same thing. And what they realize is he's not telling them he's losing trades. He's only showing his winning trades. He's not showing them his losing trades. Yes, he made $1 million one day, but for the last 30 days, he's been losing $100,000. So at the end of the month, he's $2,000 in the negative, $2 million in the negative. Find a catalyst. A catalyst is what we call a trigger. That bar you saw on the chart last time was that catalyst. There is a reason that I'm not telling you need to go look in the news and find a catalyst, what's going to happen, iPhone or whatever it is for Apple. I'm saying on the chart, there's a catalyst, there's a trigger. There's something happened that was not happening before. You need to be focused on the chart, not the news, not the rumors, not the tweets. Track trades. Oh my God, this is a beautiful one right here. A lot of people, almost 99% of the people, do not log their trades after they're done to learn from their mistakes. We have a log that we can send you, can email you to actually start using it. It's an Excel sheet or a PDF sheet. You can start actually saying where you bought, where you sold, what did you do wrong. This way, after 20 trades or so, you realize you made the same mistake so many times, you don't do it anymore. You just leave it alone. And that's how you work on yourself until you become a profitable trader. Build a watch list. Instead of jumping around between what stock to buy, this is trending, this is not trending, this is hyped and stuff, how about you build a watch list, which means let's say you have three stocks that you trade on every single day. You have three stocks, not too many, and this is what you trade. And here's the benefit of that. Imagine yourself a dancer, and you go with the same exact partner to dance every single day for a year. What do you think is going to happen? You're gonna expect that your partner's moves before they even make it. Doesn't matter if a lady or a man. Before your partner moves, you expect it. You're in harmony with him. Everything is just fitting together very smoothly. Now, in that night, take a different partner that you never met before, different dancing partner, using the same exact dance floor, using the same exact music, using the same exact your shoes, your suit, whatever you're wearing. The only different in this thing was a different partner, and it's going to become a chaos. Yes, it might be a controlled chaos if you're both good at dancing, but you never know. Is he good? Is he not good? Is he, what's happening? What is he doing next? What is he doing right now? It's just controlled chaos. When you are familiar with your partner, you become in harmony with it. Same exact way with stocks. When you trade the same stock every single day, you become in harmony and increasing your potential to actually be a consistently winning trader. And of course, the most important one is to protect your capital. You need to protect your capital. What does that mean to you? When you say I'm not going to lose more, my risk is 25 cents per share, that's not a losing trade. If the trade hits your stop, that's not a losing trade because you were willing to lose that 25 cents. It becomes a losing trade when it becomes more than 25 cents. When you leave it drop to 50 cents, $1, $2, $5, that's a losing trade. If the trade did not work and hit your stop loss, that's nothing more than a lesson to you. It's not a loss, it's a lesson. It becomes a loss when you violate your stop loss, you pull it, you move it, whatever else you do, that becomes a losing trade. The stop losses in maximum risk per trade, maximum risk per share, maximum risk per day, maximum risk per week, all of this is listed on your trading plan so you protect your capital. This is the most important thing that you're actually going to have to face as you continue your journey of day trading.